everybody.
You know, welcome. Very, very glad to have you. If you're not new, welcome. Very glad to have you as well. But man, it's good to be back in the lab. Another week, another training for no lesson. So I'm ready to dive in and see what we got for this week. So I know I wasn't able to post it, you know, a lot on the quizzes and stuff this week. I didn't have phone reception. I was in the mountains and I had a couple quizzes I wanted to post, but I didn't get a chance to. But I think we starting to get the understanding. I think we're starting to understand point value and tick size. Most importantly, point value. Uh, but yeah, we spent several weeks on that, and it's really good to see everybody starting to get the understanding. So let's jump on in and
You expect anybody to Dodge Ram pickup? Yes.
get going. So I'm gonna turn it over to you, Bob. Are you ready for us?
Yes, sir. Here's our disclaimer for Futures and Commodities One-on-One Trading Group. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means you alone are responsible for your actions in any trading or investing activities. Thank you.
Hey man, this school thing is starting to become bigger than what it had been.
Very good. All right. Quiz. Dr. Mary, you gonna take us
Yes,
through the quiz? Can
I
we
see.
turn over to you?
Yep, I see one quiz question in the chat.
All
It
right.
says, quiz question of the week. Tick sizes are the largest increments that the market moves in. True, false, not sure.
False. It's the smallest.
Pam said the smallest. False. All right.
Anybody challenging Pam? They don't look like they got any challengers because everybody said false in the chat for the week. So it doesn't seem like that is a point of ambiguity for anyone.
Oh,
All
sound
right.
like sound like they understand that then. Great job.
Yes, they do. Very good. All right, over to you, Barb and Mr. Wright and Mr. Johnny.
All right. Time for some more training. What we got this week, Barbara? Some kind of book.
You could say that. It's one of the best books.
I don't know if it's some kind of book. I think it's a legendary book, a great book, man. So
One of the best you could get if you want to learn about futures and commodities. I will say that.
It is
yeah,
kind of book though. It's a good
yeah, appreciate that, Pam. It's real good. I think everybody
Thank you.
is starting to understand the importance of having this book. If you haven't gotten it, you need to really, do that for yourself. Get this book because the information and put it this way, you gonna get a lot from the calls. You're gonna get a lot of training coming on you. But going through the lesson and then with it being way more in depth, with the understanding and breakdown in the book, and being able to go back and refer to it whenever you need to. 'Cause everything that we going over on these calls coming from this book right here. All right, so go online and get that book. What else we got, Barbara? What we doing? Oh, is this a retreat? The annual retreat, that event that I keep waking up every morning thinking it's time. It's April.
Yes, it is.
Man. So some of you may have been on the call. Barbara played a little clip from the first retreat. This actually when I wanted it to play, Barbara, to be honest. So, but that was good where you did it. The thing I want to say about this guy is if you haven't made up your mind yet to come to this retreat, do it. There's options to make it easy for you to make payments to get to the retreat for the registration. Most important thing is the understanding that you're going to get by coming to the retreat. The time you're going to be able to spend with leaders and pick their brains, and most importantly, the relationship, the bonds that have been formed from the previous retreat. Those who have been to the retreat, they can tell you that that was one of the best things they took away from the retreat. But make sure you take advantage of this opportunity because it's going to be some power packed information, and we're gonna have a great time. So it's gonna be business and leisure. So just know when you come to this retreat, you won't leave the same. Right, Bob?
That's correct, sir.
I second that.
Yeah,
Yeah.
that's right. Man,
Every
I'm telling
time
you,
I've gone and come back, not the same. Always go to the next level.
Yes.
there's so many nuggets that are dropped and learned at these retreats. I'm telling y'all.
Hmm. Yes, it is.
I'm telling you. If you heard that clip Barbara just played, you know, John wife said she just didn't understand, so she just said that she wasn't interested. Listened to the calls, and then she came with her husband to the retreat. And you heard what she said. So yeah, y'all need to take advantage of this event. It's gonna be a life changing event. All right. What you got here, Barbara?
We're back to the formations. This time understanding the risk and profit in a 1, 2, 3 bottom formation. This can be found from lesson 9 in the manual Futures and Commodities 101.
Determining a plan for profit and loss. You know what? We talk about planning all the time, and having a plan, one our rules. But it's so much planning that we can do when it comes to trading, and a lot of times we just want to get in the market. We just want to get in the trade, and we get anxious. We get a little, you know, look, in a hurry sometimes because we don't have a trade on. I went a couple of weeks recently without having a trade on because I just didn't see any trade that I wanted to jump in, and it wasn't that I didn't want to. It was actually kind of bothering me that I couldn't find a trade to get into. But sometimes it's best to have a plan, to be patient and wait for the market to do what you're waiting on the market to do. Even though you might want to get into trade and see here's another thing. It was discussion we was having, um, on our other group call about the fact that it was just the market didn't seem to know what the market wanted to do itself. It was not even seemed like the market didn't even know which direction it wanted to go in. And I'm always telling people, if you're not confident, you need to get out of the market, um, and go back and get the confidence first. And it's the same thing, even if you do have the confidence. If you don't see a trade or you don't see what it is that you're looking for, don't force it. Don't just jump into a trade just to have a trade on. Um, I used to do that because I just couldn't stand the fact that I wasn't trading anything, and I would just force a trade and end up losing money because I didn't want to get into a trade. So the planning, having a plan, sticking to the plan, like we go over in the rules, it applies to us so much when it comes to trading, all type of aspects. Risk management is such a big thing. I know y'all hear us keep talking about that because it's so important. Wish someone had those discussions with me when I started. So, well, what you got? Talk to me. What's the list here on this slide?
So when you are determining your plan, there are certain factors that you need to consider to have a solid plan, a plan to get in a trade and a plan to get out. And that concerns your contract size, what we basically have been going over, your specifications page, your tick size, your current price in the market, your entry price, your exit price, your target, and also something very important that Dr. Melba tells us, you have to learn the personality of the commodity, the price fluctuation or average daily moves, because some markets are very volatile and some trade a great deal throughout the day. And if you are getting into a trade and you don't take that into consideration, you could get stopped out sooner than you would if you would have incorporated that into your plan. So learning that commodity personality, how it moves daily, is very important. It's put last on the list, but it's very important. And this is not 100% everything, but these are some of the most important dynamics of your plan that you want to have for every trade that you get into.
Mm-hmm. Mm-hmm. Well said, Paul.
Yes,
And
sir.
when you mentioned about how you get stopped out, boy, I can relate to that one.
Yes.
Ooh, wait. Yeah. So the contract size we've been talking about, and we should all understand and know that now, the importance of the contract size. Because the contract size is where a lot of the other things come from, like the tick size, the point value. A lot of this has to do with the size of the contract. So when you see where it says current price, so our current price can be two different things. If the market's closed and not trading, the current price would be the closing price. That would be the last price. That would be the current price. But if the market's open and trading, the current price would be the last price that the market's trading at currently. And do we do we like to put orders in and get filled at the current price? Can somebody tell me, do we like to trade that way?
No, you want to do limit.
Man, you be up all night reading that book, don't
Yeah, sometimes.
you? Awesome. That's right. Yeah. The current price, ain't nothing wrong with the current price. Matter of fact, let me tell y'all, for example, what happened to me one time talk about in the beginning of not not using limit orders all the time. I called my broker getting into a trade. My my order was filled. For those that don't know, I called a broker to place my orders. Okay. So my order was filled, and I actually had my computer on at the time, and I heard the figure, when the order was filled go on. You know, I knew the order was filled, but before we got off the phone, guys, I got in the trade and I was stopped out before we hung up. Um, so before we said bye, I had already been stopped out of the trade. He was giving me the price. I got stopped out, and this is going back to the point Barbara was making about getting stopped out of the market, and this is why we use limit orders to let the market come to us. Had I traded that totally different, that wouldn't have happened. But I went with a market order because I just wanted to get into the market because it was already taken off in my mind, and it wasn't. I just needed to be patient and let it come to the price where I wanted to get in. But I went chasing after it because I thought it was leaving me. Was was that fear of missing out? I kind of got caught with that, and all I had to do was be patient and let the market come to me. But that trade probably lasted, 10 seconds, 15 seconds, and that's going back to the part we talking about having a plan and sticking to it. But yeah, imagine getting in the trade, getting stopped out of trade, and you ain't even hung up the phone with it, bro. So I don't know if I ever shared that with y'all, Barbara, but true story. Woo. Oh man, price fluctuation. Uh-oh. Barbara, go back to this for me. Hey, slide for me for a second. Price fluctuation are are average daily moves. So Barbara, make sure I understand what you're saying here. Um, and the market's trading is fluctuating, and the market makes average daily moves. Is that what you're saying?
Yes, sir. And you also tell us something very important that you incorporate in your rules, and that's never get into a trade you could barely afford.
Yes. Yeah. Very important. Even in our disclaimer, it mentioned that we want to make sure that
Yes.
we got to know our risk appetite, and we got to know, that we're not trading with money that if this goes south and we lose the money, this not gonna stop us from being able to eat or do whatever we need to do. We're not trading with our bill money. That's right. All right. What was that next slide, Bob? I know we talked about formation. We went over the charts and we spent a lot of time on the charts. Matter of fact, um, we had a lot of quizzes that go around on the chart. But I always try to make the point to make sure everybody understands we're not looking for a lot of stuff on the chart. So it's not like you got 10, 20 things that you watching for. You got three formations that you watch for. So in this slide, Barbara has an illustration of a 1, 2, 3 bottom formation. Barbara, walk us through this if you don't mind.
So in a 1, 2, 3 bottom formation, you have to trade with the trend in any formation. And the direction is going to be an uptrend. It's going upward, meaning you are going to be going long, you're buying. So the lowest price on the chart is going to be your number one, and then your entry is going to be your number two, and your stop loss is going to be your number three. So your number two is always going to be your entry. And a good rule for you to have as a stop loss is going to be your number three. But you are going in the direction of your target, which most of the time is called a 50% retracement, and that's going long in a bottom formation. And so you have to consider that when you decide which formation you're going to trade. You have to know the direction you're going in. You have to stay with that trend and not trade against it. Remember, the trend is your friend. You don't want to, what they say, buck against the trend. So you don't want to do that. So these are the dynamics of the 1, 2, 3 bottom formation. And we're going to get into detail what goes on between the 1, 2, and 3 as we go further along in this lesson.
You know what, Barbara? Looking at this made me want to ask a question. Let me ask everybody a question real quick before we move on. If we see a chart and a 1, 2, 3 bottom formation has formed on the chart, the market just finished doing what? What was the market? How was the market trading before it formed a 1, 2, 3 bottom? What was the trend?
Up.
The trend was up, Pam, that's what you said?
Yes.
Okay. Anybody else before I say something? Everybody agree with that?
Mm-hmm.
I
You said
don't.
yes, Stephen?
Yeah,
Okay.
I don't
Now,
agree.
you don't agree, Dr. Mayor?
Mm-mm.
Right. So let's walk through this so y'all can understand why Dr. Mayor doesn't agree. So when the market forms a bottom formation on the chart, that means that it's starting to bottom out, starting to make a bottom. And if it's starting to make a bottom, is it going to be at the top of the chart or it's going to be at the bottom?
It's at the bottom.
It's gonna be at the bottom.
It's going to be at the bottom.
But
So
I thought that was because it was going up first, and now it's coming down. So that's when you start to use your formation. So maybe I'm wrong. I mean, I'm wrong. I know.
no. Well, what I asked you guys was, what was the chart doing when it started to make a bottom? What was the trend that it was in before it
Oh,
started making a bottom?
okay. Then it was going down.
Yeah, so it had been in a downtrend, and then it started to bottom out.
Got it.
It started to make the 1, 2, 3 bottom, which gives us the indication that the market could be changing directions and now looking to try to start an uptrend.
Got it.
Everybody
okay, I
understand
see
that?
it. Yeah, I see it now.
Yeah.
I know if we had a visual, it may help you, but I want you to be able to see it without looking at the chart.
Got it.
Can you see it?
Yeah, I can see it clearly.
Okay. Awesome. All right, Barbara. I mean to hold you up. I just had that question I wanted to ask. Come on. 1, 2, 3 bottom formation scenario. Okay. Everybody understand the scenario?
That's what I said earlier. In a bottom formation, you are going long. You are going up. So you're going to enter above the number 2, which is a buy limit order. Your stop loss is going to be below the number 3, which is your sell limit order. Your target or 50% should be above the number 2. That's also your sell stop order, because you have to remember, when you buy to get into a contract, you have to sell to get out. If you sell to get into a contract, you buy to get out, which is what's down to the bottom. If you buy to enter, you sell to exit. So you have to remember, it's just that we're only dealing with the bottom formation. Number 2 is your entry. You enter above your number 2. Number 3 is your stop loss. It's below the number 3. And your 50% is always above the number 2 in the bottom formation, because you're wanting price to go as high as you want it to go, which is your 50% retracement. So you're buying to get in, you're selling to get out in this scenario. Does everybody understand that?
Mhm.
Yes. You said
Okay.
it's always above number 2 in the bottom formation, your target.
Yes, because you remember your trend is traveling upward.
Right.
It's
Okay.
an uptrend, so you have to go in the direction of price, which
Got
means your target automatically has to be above your number
Mm.
2.
Yes. Okay.
Right. So
Thank
this
you.
is the bottom formation scenario. Always go in the direction of price. Never go against it. If you go against it, you are trading against the trend. And it's not going to be your friend if you do that. And you're going to find out very quickly.
Yes, yes, yeah. I hope everybody's clear on this. This is a good scenario explaining the bottom formation and how we would enter, how we would exit, what our target would be. Everybody clear, right?
For those of you on the line, most of the times there's 2 types of learners, those that are visual and then those that are readers. So for those that are visual, this slide makes no sense to you. For those that are readers and real comprehension people by reading this, writing this whole slide down in your notes makes perfect sense. So I don't want anybody on here to be like, I don't get this. That doesn't make sense to me. And its chances are is because you're a visual person. So when she pulls up a slide where she shows this visually, then it's going to be cemented for the visual people. So be patient. Mm-hmm.
And we'll go over it again. I'll repeat myself several times when I get to the chart. So to help you, it'll make sense to you. Thank you, Dr. Melba.
Risk management, there's that word again. Yeah, I need to understand. That's very, very important. So, okay, Barbara, what's this one?
So this is very important. This is the meat and potatoes of your risk management, because you now have to determine, can I afford this trade? Is this trade worth me getting into? Is my profit going to be higher than what I'm risking to get into this trade? So there are certain formulas, very simple formulas that you do to determine, and you do this with every trade you get in. You have to do the math with every trade, doesn't matter. You cannot just get into a trade just because it looks good and you have not done this part, because you're going to risk more than you could possibly, and pretty much will risk more than 10% of your account if you don't. So you're going to calculate the stop loss amount. How much are you willing to risk that's within 10%? This is outside of having the required margin in maintenance. This does not include that, because before you can even enter into the trade, you have to show the broker, I have the margin amount in my account. This is separate from that. So I want to make sure everybody understands that. You take your entry, your number 2, and you subtract it from your number 3. It's going to give you a certain number of points. That's going to give you a certain number of points. That's your risk exit. those number of points. But there's another step, and we're going to show you on the next slide how to calculate that. Whatever those number of points are, you're going to multiply it times your point value. That's going to tell you the dollar amount of what you are risking. So let's just say if it was corn, and it's a 10-point difference between your number 2 and your number 3. You would take that 10 and multiply it times $50 because that's the point value for corn. That's going to tell you in monetary and dollar amount how much you're risking. You didn't have to look at your account and say, well, is this 10% or less of my account? If it is, then you're safe to get in that trade. If it's not, you either need to say, well, maybe I need to risk 5% and not 10%, because you can risk anything. Mr. Johnny tells us this all the time. You can risk anything from 1% to 10%. It doesn't have to be the full 10%. And so the next is going to be the calculation of the profit, because you're in the market to get a profit. That's typically your 50%. You take that target amount, whatever that 50% is, you subtract it from your entry point of number 2. It gives you still a certain number of points. You take those points, whatever it is, it could be maybe 50 points. You take 50, you multiply it times the point value for that commodity. Let's just say it's corn. That will be 50 times 50. So you are risking 10 points, whatever that is, 10 times 50, to gain 50 points, 50 times 50. Which one is higher, your profit or your risk? Calculate your risk to reward. That's your third step. You divide the reward by the risk. It's going to give you a certain number, 3 to 1. You're willing to gain 3 times the amount that you're willing to risk. So that's your risk to reward. Those are 3 different financial formulas or scenarios, but you have to do this with every single trade. This has to be done this has to be in everybody's plan, no matter what. You have to do that. The only difference, what we don't have up here, is ticks. Some brokers use ticks on their platform and not points. That's why we taught you the ticks, so that you would be able to determine what you're risking in tick value. So it's going to be either points or ticks, but you have to know either or. So this is a part of your plan. Like, some people may only trade in one direction, some may trade them all, but everyone have to do this part. No matter whether you're the person who's going to call your trade in or you're the person who's going to put it in yourself. You have to do this no matter what. And it's very simple math. As you can see, you're just subtracting and multiplying is what you're doing.
Well, Barbara, is that why I kept blowing my account up? Because I wasn't doing this right here?
Pretty much, sir. Pretty much. You didn't have any risk management. Zero. No. That's why we have those 20 rules.
So I hope this
Exactly.
slide is something everybody is writing, taking notes.
Everybody has to do this. We have examples we're going to show you on the actual chart. Everybody, don't matter what kind of trader you're going to be, you could be fundamental. You're going to have to do this. Everybody does.
That's right. That's right. Dynamics of the bottom formation. Confirm 1, 2, 3 bottom formation. 50% retracement. More than 3 touches on the trend line. Confirmation for the trade entry. Test of number 2 for trade entry. Is Johnny be back with us, y'all? Anybody?
Mr. Johnny?
I don't think he's back.
Maybe.
He's here.
He said he'll be back, but I don't think he's back yet. Okay. Well, unless you want to, Dr. Mel, I'm gonna talk about this a little bit. So the dynamics of the bottom formation. Confirm 1, 2, 3 bottom formation. And here's what I want to say. A bottom formation can form on the chart. But it's really not a 1, 2, 3 bottom until it's confirmed. And everybody should understand that. We can have a 1, 2, 3 on the chart, but it's really not until it's confirmed that we have a true 1, 2, 3 bottom. Now, who can tell me, how do we know when we have a confirmed 1, 2, 3 bottom? Somebody gonna unmute and just ace this. Who can tell me how we know when we have a confirmed 1, 2, 3 bottom? What takes place?
When it's staying when it's in the bottom formation for longer than 2 weeks. 2 weeks.
2 weeks.
2 weeks is the confirmation. I hope I'm saying that correctly.
14 days.
Well, what you're referring to is the time frame that we like to see the formation form in.
I say 14 days, 2 weeks.
Yeah, when we have a formation that forms, we want to see it take place within a 10 or 14-day time frame. It gives us the best structure for the chart when it forms in that time frame. That's what Jamal is referring to.
But I did not adequately answer the question, did I?
Well, when we have a formation that forms on the chart, something takes place for it to be confirmed that it is a true 1, 2, 3 bottom.
Higher
That's
highs
what
or higher, lower low, higher highs, depending on whichever way it's going, or lower lows. Is that it?
Okay. Dr. May, you want to help them out?
I would love to. Thank you for asking.
Yeah. Because I know you're sitting over there. So like, yeah, come on, help us out, Dr. May. What?
Okay. So in a 1, 2, 3 bottom formation, we already discussed that the 1 is the lowest point on the chart. Then the market travels up, it makes a number 2. Then the market goes back down again, makes a number 3. When the market travels back up and its price trades through the price of the number 2, that's how a 1, 2, 3 bottom is confirmed. The market has to trade through or above the price of the number 2. You have to remember your 1s, your 2s, and your 3s, all they are areas of support and resistance. We're using numbers so that you can see areas of support and areas of resistance on the chart so that you can have a formula to get in and out of a trade. But don't get it so complicated that you're not able to see that your 1, 2s, and 3s are just areas of support and resistance on the chart. So if the market number 2 is an area of resistance in a 1, 2, 3 bottom formation. So if the market can trade through that area of resistance, then it has confirmed the 1, 2, 3 bottom.
Excellent. Excellent. Did everybody understand that? Perfectly explained. Did everybody get that?
Yes.
Awesome. Like Dr. Melvin said, we want to see the price trade through and above that number 2, which is resistance. We want the market to show us that it's going to trade through that resistance before we get into the trade,
So
because
we're
that
looking,
resistance could hold.
so we're
That's
looking
why
for
we
this,
don't jump into it.
so we're
What was
looking
that?
for this to happen for between, a
Mhm.
10-day span before we decide to enter.
I didn't catch that. Say it again, Steven.
I'm asking, between that 10-day span of confirmation, after that 10-day span of confirmation, that's when we start.
So we reference the 10 to 14 days because it gives us a good structure on the 1, 2, 3 forming.
Right, right.
So this is why we like to see it form within that time frame.
Okay,
When you see a 1, 2, 3 form and it takes much longer than 10 to 14 days to come together and form the formation, the thing that you would notice is that the 1 and the number 2 and the number 3, they're going to be quite a ways away from each other. It's going to be it's going to be a good distance between the number 1 and number 2. And then it's going to be quite of a good distance between the 2 and the 3, which means now we got a risk management problem,
right, right.
because now the 2 and the 3 are so far away from each other that you got to risk a lot of money
No, thank you.
to trade this, because your stop loss has to be below the number 3, which is quite a way away from the number 2. You understand what I'm saying?
Yes, I do, clearly. Thank you.
Yeah. Right. Awesome. So what is the first activity we do when we look at a chart? When we see a chart and we're getting ready to work up our chart, what's the first activity we want to do on the chart? Who remembers?
50%
50%
retracement.
retracement.
Very good. That's our first activity on the chart. We want to find the 50% retracement, because sometimes we can see a bottom formation form on the chart and confirm, and it can already be at our target. It can already be at the 50% retracement. So do we still want to look at get into that trade if it's already at our target? We always do and find our 50% retracement first. We start with that. But in our bottom formation, our 50% retracement is going to be out. What if we get into a trade? What would our 50% retracement be for us when it comes to our trade? Now, Barbara already mentioned this in the previous slide. I get into a trade, it formed a bottom formation. I enter the trade. Now that I'm entering into the trade, the 50% retracement plays what role?
Target.
There you go. There you go. Excellent. 50% retracement is going to be the target that we are looking to see the market trade to. We are always expecting or looking for the market to retrace 50%. And that's our target when we enter the trade. So in the bottom formation, we enter above the number 2 after the market, shows us that the resistance didn't hold. Now we enter the trade, and in this trade, we are looking to see the market trade to our 6-month 50% retracement. Very good.
Can I say something on that?
Please do.
Always remember your 50% retracement is money in your bag. Okay? It makes no sense to enter a trade and you don't know how you profiting in the trade.
Mhm.
So that's why it's the first thing you do when you pull up a chart. You want to know how much money going in your bag. I love
Mhm.
retracement. I do them all day long because it keeps me encouraged. That's how much money going in the bag.
Mhm.
So that's how I want you guys to look at your 50% retracement. It keeps you encouraged because that's the money that's going in your bag. Your target is your profit. And that's why from where you start to trade to where the 50% retracement is, it got to be a distance. Otherwise, you're trading for no money.
Yep.
Right now, I'm going to keep it real 100 with y'all. Very good.
Very good. All right. Barbara, what's this touches, 3 touches? What you talking about? You gonna reach out and touch the trend line? What you mean?
Well, we always trade with the trend. The trend is our friend, but we want a strong trend. We want to see where those levels of support and resistance have touched that trend line more than 3 times. That tells us that that's a pretty strong trend, a pretty good one to get in and trade. You know, you don't want to get in a trend where you've laid your trend lines and it's touched it 1 time, basically. That's a very weak trend and really subject to turn around on you. So there's a lot of indicators. This is a very strong one, that you're in a good trend and it's going to continue in that direction.
And you know, Barbara, this is the definition of how a trend is established. When if you want to know,
Agreed.
well, how do we know when it's definitely in a trend, it's in an uptrend, or it's in a it's this is how you know right here. We want to see these hits, these touches on the trend line, and this is what establishes that we do have a definitely uptrend. We have 3 hits or touches on the line, on the trend line, and now we have an established uptrend. So
Can
I
I
know
say,
y'all know all this stuff anyway,
can I
but
say something also?
oh, go ahead, Dr. Mill.
The trend line is really important, y'all. And yes, you want 3 or more touches, but one of the things as you learn to trade and you advance, the trend line is going to be your barometer of helping you with the direction of the marketplace. And so if your trend line is being broken by price action, it's above the trend line, below the trend line, you don't want to be in that because you don't know what trend the market's in. But if it's sitting on the trend line and it doesn't break it, and it's like trains on a track, and it's just touching the trend line, touching the trend line, touching the trend line. It's not breaking it, just touching it. Then it's telling you this is the trend that the market is in. This is where price action, cannot go below. And it stays and gives you a constant confirmation that you are trading with the trend. So learn to enjoy drawing trend lines on your charts along with your 50% retracements. It'll help you greatly.
Man, I just want to piggyback on what Dr. Mill. If you haven't opened your account on Bar Chart, your free account, and haven't been playing with, doing trend line on the chart, you need to do that because I don't know. I don't know how anybody can trade. I don't know how anybody trades without using trend line. Like Dr. Mel pointed out, the trend line is so important. And if you trade without using a trend line, I just don't understand how you're doing it because it shows you and helps you so much when it comes to trading. You want to have the trend lines on the chart because first it's going to allow you to see what the market is trying to tell you. But like Dr. Melvin said, when you get to a point of, you know, going a little higher, going a little further with your trading, advancing in your trading, you're gonna use them trend lines, man. Like that's gonna be your bread and butter. That's what Dr. Melvin was trying to tell y'all. The trend line is gonna be that important. So I hope everybody's going on bar chart. I don't care if it's 5 minutes a day, but go on bar chart and do these activities, y'all. All right. So we got another point right here where it's a confirmation for the trade entry. And it's similar to what I already talked about, but what's our entry? Who can tell me what's our entry when we get in the trade?
It's a 2.
Number 2.
The number 2. It's the number 2. Whether we trade the market to the upside or we trade the market to the downside. It's the number 2. And Dr. Melvin explained it to y'all, very well how we have a confirmation that we have like 1, 2, 3 bottom. But our entry is going to be based on that confirmation. We need that market to show us that it's going to trade through that resistance, and we will have our order, our buy order, placed above the number 2, meaning we're going to have a limit order, as Pam mentioned earlier. We want the market to come to us, trade through the number 2, and fill our order, which will be above the number 2 after the market trades through that resistance level. This is where our order would get filled at. Everybody clear on this?
Yes.
Awesome. Take us through the last point, Barbara, if you will.
This is the test of the number 2 for trade entry. So like Dr. Melville was saying, confirm 1, 2, 3 bottom formation. It makes the number 1. It trades up away from the number 1 and makes a number 2. That number 2 trades down away from the number 2, making a number 3. But then that number 3 trades back up and it trades past the current number 2, making what's known as a new number 2. That is called the test of the number 2. It's not, you don't enter the trade until it does that, because it's letting you know that the trend is continuing. It's making a new number 2, a higher high. And that's when you want to enter above the number 2.
Excellent. Well, we got some. Oh, I'm going to ask you if we had some slides to show this, but you are already on it. Go ahead, Barbara. Keep going.
So this is corn, December 25. This is your bottom formation. It depicts everything we just went over on every slide. Shows you the point value for corn, $50, the current margin and maintenance, and this does change and fluctuate according to the exchanges. So you'd have to have already in your account $1,072 to even be able to get into the trade. Like I said earlier, this does not include your risk amount for your stop loss. And then every day at the end of the trade, while you're in it, you have to show you have $9.75 in your trade. Gives you the first notice and the expiration date. But if you look down to the bottom, the red line represents your stop loss. This, I guess, magenta or pinkish is your entry, and the purple up top is your target. So you see your number 2, your number 1 is down to the bottom. That's your lowest price. You take the lowest price on the chart and the highest, And how do you get the 50%? You take those two numbers, add them together, and then divide that number by 2. It gives you your target of 50%. You want to do that as soon as you come to the chart. That's the first thing you want to do. Like Dr. Melville was saying, you want to know how much you're going to profit. Because what if this is a bottom formation and your 50%'s already been made? So if that's your target, that would tell you what you need to wait. That's not a trade you need to get right into. That's why you want to check that first. But we see that the target is way above the first number 2. So it traded up and made this first number 2 down here, right where it says entry. It traded back down, made the first number 3. It traded back up, made a new number 2, and it tested this number 2 beside it. It traded right past it and made a new number 2, the second number 2. So in this one, I entered down here, and my stop loss is underneath my number 3. Now, another thing Dr. Melba tells us, and we'll look at charts, is that we need to look to the left to make sure, because sometimes there could be a strong area of support and resistance to the left, and you may want to bring your entry up higher past that because it could have trouble trading through that area. So you always want to make sure you look like traffic, you look both ways. So you want to look to the left to make sure. But in this case, we entered at 408 and our stop loss is at 401. And so if you subtract 408 from 401, it gives you 7 points. So we know our target is up here at 432. So I took 432 and I subtracted it from 408, which is my entry. It gave me 24 points. And that's an error down here for 18 points. So disregard that. So I know I'm risking $350. So if that's 24 points, and let me get my calculator out since I got the typo on the screen. Forgive me, everyone, for that. 24 points. So I'm going to take 24, I'm going to multiply it times 50. That's $1,200. So I'm willing to risk $350 to make $1,200. That's a 3-to-1 ratio, 3.43 to 1 ratio. Your risk is 1, but you're making 3 times that amount in profit. So this is what you have to do for every trade. And as you see, it kept trading up, making new number 2s and number 3s. It did go in a little sideways channel, right there, but it hit its target. And it's already traded past this, but I just showed you this point. If you go and look at Coin December, you'll see that it's already traded past this. It went back down, but it's made several number 2s because remember, you can have multiple number 2s and number 3s before it breaks your trend. See, you have the trend lines here. It's hit it. It has more than 3 hits on it. It's hit the trend line. It didn't hit past it, but it did touch the trend line on the number 3 side and the number 2. And it did it more than one time. But this is proper risk management for every trade. You have to do this. I can't stress that enough, that you have to do this for every market you go into.
And when you do this, after a while, you'll start to learn the tools of bar chart, and they're actually tools that do this for you. But when you first start, it's good to understand the foundation of what the tools are, the math the tool is actually doing for you. But I don't want you guys to get so overwhelmed, like, oh my goodness, it's a lot of work. It's a lot of work because you're learning how the market functions and how the actual math is calculated. But you are going to get to a point where you're going to use tools You're going to click on the 2 on the chart. You're going to click on your 3 in the chart. You're going to click on your 50, and it'll put those numbers in the tool for you and calculate all of this. And it'll lay the lines on the chart for you and everything when you click. So I want you guys to understand the math, understand the foundation. So when you learn all the fancy tools in bar chart, you'll appreciate the math behind what the tools are doing for you so that you can actually do multiple charts and flow a lot more quickly to see which chart has the best trade advantage that you would like to get into, because there are going to be so many opportunities, and you want to be able to pick the one where you have the best risk management, the best, reward when you get into trade. And so you'll be doing multiple of these and then choosing the best of the pool that you've done your chart workup on. So it gets to be fun that way.
Yes.
Excellent point, Dr. Mayor. Because I know it can seem a little overwhelming when you see the chart and saying, okay, I gotta do what? But yeah, like you
There is
pointed
a
out.
more easier way.
Yeah.
to do it.
But it really it really does lay down the foundation for you to learn how to do it, and understand it. But yeah, it's good. Great point Dr. Mayor pointed out to let you know that yeah, you can go on bar chart and use the tool that'll do this for you. Even the 50% retracement, we tell you to do that first. And it's good for you to know the formula so you understand how to do the 50% retracement. But there's a tool to do that for you too.
Yeah, we
So
can show you when we get over the bar chart. We'll show you the tools.
So that you guys, one more thing. So that you guys
mhm.
know, like every time I go to a retreat, I learn different tools because there's all our different classmates come to the retreat. They start sharing what tools they're using, and that's how we all learn together. So I'm gonna let you guys know right now, there are a lot of tools on bar chart, and it's going to take a lot to learn them all. But when you come out to places like the retreat where everybody's discovered something new and we're all sharing, and building relationships, that's how you learn the next level, because like the tool for this stuff where it lays the lines, I just learned that at our last retreat when Paula got up and started explaining something on the charts. I was like, snap, I ain't never seen that before. And I learned a new tool. So I'm just saying to you guys, that's one of the things that's beautiful about the retreat. When you have different folks coming from different places in the world and we all convene together and learn together, we teach each other so much that you wouldn't learn on your own coming on classes on Sunday nights. So I'm just explaining how we've evolved, over time, learning together.
You got to come to Arizona. Gonna have to come to the retreat to learn.
Man, y'all just don't know.
You want to be
Excellent.
there.
I hope everybody got this, but and even though Barbara with your, with your 18 points right there, you still had the actual profit amount right.
I know that was an error with 18 points, so
Yeah.
forgive me, everyone. Should be 24 points there times $50. It's $1,200.
Hope everybody understood this. This was excellent illustration. Okay. All right. Well, the homework review time.
Yeah, we had some people do the homework. Everybody did a wonderful job. Excellent job, everyone. Thank you so much, everyone that participated in the homework. Let's see, I can pull it up. Is there anybody have any questions?
Hey, Barbara. Yes, this is Lorenzo. How you doing?
What's
Good,
going
sir.
on?
How are
Go.
you?
All right. I've been kind of out of touch for the past couple of weeks. I had other things going on, but about this homework, is it on a lesson that that y'all do like this Sunday, or is it a previous lesson?
So the homework from last week was pertaining to the call last Sunday.
Okay.
Yeah, so it runs like that.
All right. So the homework for this week will be pertaining to this call.
Right, it's gonna be pertaining to this call. Yes, it
Okay.
is. And I could
So
pull
I
it
was a
up.
little late getting on this training, and as soon as it gets up and I review it, then I should be able to handle the homework.
Yes, sir. And I could pull it up if we are past the hour, so.
I'm not
Okay.
gonna. I don't want to keep you long or over the time or anything. I just want to get get back in the flow.
Hey, man. You,
Uh,
you good. It's
I
all
miss you.
good, man.
Like I said, I'm kind of staying with things, but it's always good to be active at that active time and whatnot.
Uh-huh.
Yes,
Mm-hmm.
sir. Thank you so much. Did you want to go over some of the questions from the homework, Delvin? If not, we could.
We already passed the time.
Yeah, we are.
Okay.
Well, don't do that. Don't do that for that on my accord or anything like that. Like I said, I figured out I'll reach out in the community.
Oh, did you have a question about something, Lorenzo?
No, I did, but it was answered. It was about the homework thing. Cause see, this was new process or new aspect to the community. So I just wanted them make sure I knew what was going on, how it was, and Barbara answered it. Like I said, I could reach out to her at the Telegram group, and she could answer it. I just wanted to make sure because I wanted them to get back on track and whatnot.
Well, let me ask you, since you're right here, if I can, let me ask you a question, man. Did coming to the retreat help you?
Oh yeah. I look. I plan on coming to the next one, and you make sure you have everything planned and whatnot, like the barbecue or whatever, so I can plan and stay in my state. Because I really that was the best thing, and I don't care how long it takes or what it takes for me, as much as often as I can, as often as I need to, I will be there till I learn this. Because, like I said, this is gonna be part of my everlasting go flow.
All right.
That's what I'm talking about, man.
And
Yeah.
I'm like I want to be Tanisha. I want to be one of the big supporters to bring people in, because I'm gonna start telling folks you need to learn a skill, a high level skill, and this is the one you need to learn, and you can get in it, and it don't cost you nothing. And I want to bring this community, this group up, and make it shine for you, Miss Delvin, Miss Brother Johnny, Barbara, and Miss Melba, and then everybody else.
Awesome, man. We appreciate you, man.
You know,
I appreciate it.
I appreciate y'all, and I said I'm slow, and it takes me a little while to get understanding about things, but once I do, but like I said, I'm down with you to the end of time.
Awesome, bro. Awesome, man. Appreciate you, man.
Awesome. Anybody have
Anybody
any
else?
questions? Anybody got any questions to ask them? No, it doesn't matter if you got a question.
I don't have a question. This is Gwen Brathwaite, but I would like to say thank you, the group, for inviting me to this meeting. And thank you very much, Barbara.
Oh, you're so welcome. We're glad you're on. Thank you for
Mhm.
coming.
Thank you. I don't know a great deal. I don't know anything about, but it is interesting and I am enjoying it. You believe that it is a novel that I'm reading or something like that.
Nice. Okay. Well, we're glad to have you. I'm glad you're enjoying it. But just
Yes.
know this. Just know this. There's, there's like so much to learn. There's so much that we cover and go over. And if it sounds like a foreign, like a foreign language, just know that we were in that same place at one point. So you will understand, you will get it. Okay.
Of course. Yes, thank you.
All right, you're welcome.